was the Bitcoin crash first that led. I don't know if I buy that, but can you help walk us through what might be going on there, if that's even a real situation?
In the past 12 months, not only did we have a strong rally in equities, we had a strong rally in cryptocurrencies. And that did bring in quite a number of investors, right? And then institutions entering the market through futures and some actually buying coins outright. So I wouldn't be surprised if those investors who saw risk on assets everywhere outperforming globally were also buying cryptocurrencies. And so I think as Bitcoin began to weaken and they de-risked, when you look at the ownership of Bitcoin, it's maybe 70% outside the US. It's really a globally held asset class. So in the next 5 months, a real recovery in price.
As the price of Bitcoin continues to crash, down over 10% in the past week, we also saw over $100 million liquidated in minutes, with Bitcoin currently sitting just over $81,000. Tom Lee has an urgent update for those selling Bitcoin and gives his prediction on what we can expect in the next month. Historically tracking the price in the year following the Bitcoin halving and on the heels of multiple all-time highs, financial analyst and Bitcoin bull Tom Lee discusses his prediction for all Bitcoin investors and why he believes $400 trillion is about to pour into Bitcoin. Lee believes Bitcoin is about to make history, and in the coming months, we'll witness one of the biggest price rises so far since the creation of the dominant cryptocurrency. The story will become even bigger in 2025 because of the Bitcoin ETFs, with thousands of institutional investors across the United States now buying Bitcoin. The demand for the leading digital asset has increased exponentially. This has caused a never-before-seen supply-demand imbalance for Bitcoin. And Tom Lee says, everything is about to change.
We talked about how people's timeframes have changed.
Yeah.
And maybe because maybe the world's more short-term focused. But with instant liquidity, I think that's why people can go from bull to bear, because they can act with a push button now.
Would you be likely to advise them to seek opportunities on the way down, or to sort of wait for a clear, definable hammer sort of bottom?
Well, if someone was really good tactically timing, then nobody wants to buy on the way down. But I've never been able to say on this precise date, you'll have enough liquidity to buy at the low. Because what usually happens is the low is established, the market's rallying, but it's already retraced 50% of the decline.
You don't know it's the low until a week later.
Yeah.
Well, the longer it goes, the lower it goes without them pulling the trigger, the more likely they're going to not pull the trigger, because if we go lower, it gets scarier.
Yeah, it gets to become a buyer strike.
Right. I assume you don't see a bear market coming, like a full-fledged 20%er?
It's possible because it's been a couple years, but this would have to be because there has to be a layered shock on top of this. Like if the Fed, like for instance, if somehow the Fed decides that the economy's weakening, but they choose to fight inflation and let a recession happen. So in other words, the idea is, well, we've been wanting a recession to kill inflation, like let's just let it happen.
Yeah.
Then of course we're gonna have a big drawdown. But that would really require a Fed that decided the employment mandate wasn't important, because a recession, once a recession starts, there's no such thing as we can engineer a mild recession. I mean, it's like you could have a severe recession because you just don't know. You can see why people want to maybe start to be nervous and price it in.
This is the 6th day in a row. This is from Dietrich. It's the 6th day in a row on Thursday that the market is going to be up or down 1%. 6th day in a row. It hasn't happened since November 2020. And you're starting to see some signs of early panic. Next chart, please, Daniel. This is from JP Morgan via Jessica Menton. In the first hour of trading, now this was yesterday. In the first hour of trading, the so-called retail investors yanked $1.2 billion out of the U.S. equity market, the largest pullback during that time period since JP Morgan's data began a decade ago. That's meaningful. So in other words, yesterday at the open, people said, get me the f*** out. Additionally, this is from Ned Davis. Their daily trading sentiment composite is down to 20, which I don't know what's in here exactly, but that's extreme pessimism. So it's this weird sort of dynamic where we're not that off the highs, but the news is so newsy and noisy that people are freaked out.
Yeah.
So there's fear. I don't know if it's a bottom fear, but but it's.
And I'm sure that depth of market, like this market is super thin. Now if someone sells, you're going to just see comets falling out of the sky.
This is from All-Star Charts. I think this is Grant's work. Year one of a bull market, obviously, up and to the right. Year two of a bull market, by definition, up and to the right. Year three tends to be pretty disgusting.
Which is where we are now.
Yeah. This is, I've seen this chart and, I'd say I don't necessarily have problems with how this is constructed.
That being said, no? I thought you were about to fillet it.
Well,
Well,
yeah,
it's-
but
it's
but
an,
but I
it's an
can say
amalgam of many
Yeah.
bull markets.
But the one thing I'd say is that there's wide distributions in year three. So there's actually plenty of 20% years.
Okay.
So it's not like, because this chart makes it look like you're only going to be 5% and like you hover like
It
an
doesn't show
EKG.
all of the distributions.
Yeah, so this is because as wide the distributions are, year three also reflects bull markets end and then you have a huge decline.
Embracing an unyielding enthusiasm for the Bitcoin realm, Tom Lee confidently predicts that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Tom Lee reassures that a long-expected surge awaits. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all.
And you have a chart, much better than this All-Star Charts chart. You have a chart showing that the second half after a back-to-back 20% year tends to be pretty lousy.
Yes.
What are we looking at here?
This is all years that had 2 consecutive 20% years preceding it. So that's like that first vertical line says year 0. And then we're just saying, what does that 12 months later look like? And as you can see, you might be okay in the first half, but the second half is usually tougher.
Sorry, is that 1880?
I saw that too.
Yeah.
Is that like Yellowstone?
Tom was digging deep.
Okay. So this is not wildly out of character for what typically happens after you've had a big run in stocks.
Yes.
The reason why I believe in this stuff is because it's just human behavior. Like the variables in all these years are different. Tax rates are different. Inflation regimes are different. Republican president, Democrat president, like all of that stuff is interchangeable. But the
mood.
the component of this that's not is how people trade.
Yeah, because it's eventually
It's fear and greed.
we know good news gets priced in, and then
Yeah.
it's hard to determine. But then after a certain amount of time, people might get complacent or whatever you'd call it.
Okay.
Tom, you were bullish earlier, I don't know if you still are, about small caps. And I think one of the reasons why we have your chart is that the S&P is driven largely by tech stocks, but the Russell 2000 has much more exposure to rate-sensitive industries. So is the thinking that if the economy weakens and rates go down, that the Russell would maybe go down less than the market, or do you think that it would outperform in a bull market? What's your thinking here?
I don't think if there's a recession, small caps outperform. So like on that downside, I don't think it's protected. But if we look at the composition here, I actually am surprised it's done so poorly because, for instance, healthcare's the best performing sector year to date, and you can see healthcare is a bigger weight in small caps. Financials have done well year to date; it's a bigger weight in small caps. Industrials have outperformed year to date, and it's a bigger weight. You have less exposure to tech, and
So what's weighing the small caps down this year?
I think it's the push button because
Just
there's-
people saying sell small caps.
It's higher beta.
Yeah, so they're derating. They got cheaper.
Okay.
Oh,
not
wow. Small
because-
caps are down 15% in a 50% drawdown. I didn't realize that.
Yeah, so that it's not like someone's doing relative value.
They're selling the ETF.
Yeah,
They're selling
just
IWM.
Selling IWM.
It's like the first thing people sell.
Yeah.
It's like, oh, you're worried about the economy? Get that shit out of here. We're not
Yeah.
going to need that.
Tom Lee challenges the conventional economic metrics, asserting that these metrics are often manipulated to paint a specific narrative, like labor statistics and inflation figures. The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Lee asserts this journey is just the beginning, comparing the initial years to the current widespread interest and investment, with a giant spotlight on Bitcoin ETFs. Lee highlights this being a significant development in the financial ecosystem, selectively measured to create desired effects rather than reflecting the true state of the economy. In this context, Bitcoin emerges as an alternative, detached from the manipulations of the conventional economic sphere. Lee also highlights that established corporations like Apple, Amazon, and Google will use their established relationships acquired over decades to swiftly acquire substantial amounts of Bitcoin through a spot ETF, bypassing the cumbersome processes involved in procuring the actual commodity. This disparity underscores the transformative power of cryptocurrencies in traditional financial institutions. Michael Saylor underscores the importance of embracing digital currencies as the economic landscape is changing rapidly, and urges investors to leverage Bitcoin's potential to secure a more prosperous financial future. What do you think about the latest interview with Tom Lee? And how do you think Bitcoin's trajectory in the coming months will impact the crypto market and the world of investing?